and factors behind this year's remarkable first quarter surge in gold buying, the strongest since 2016. We're joined by John Reade, market strategist for Europe and Asia at World Gold Council. Thanks for joining us, John. What are the driving factors behind this continuous increase in gold prices in recent months, and how might these factors impact future trends?
Thank you. As you said in your introduction, this year gold has been driven by ongoing central bank buying, solid global jewelry demand, very strong emerging market retail investment, some geopolitical risk related buying, and then since March, rampant speculative demand seen in derivative markets around the world. I think this is likely to continue, and we might see Western investment demand start to improve if interest rates are cut later in the year.
We notice very obvious rise in global inflation rates now, John. How do you anticipate this to affect the trend of gold prices in the future?
Sure. Higher inflation over the past few years is one of the factors that has persuaded central banks to increase their gold purchases, that's for sure. And some investors, particularly those in emerging markets, have responded to higher inflation by increasing their gold purchases. But a squeeze on investor finances, especially in Europe and to a certain extent in North America, has reduced the amount of money available to invest in gold. So there are positives and negatives from high inflation.
Yeah, interesting. Asia, especially China and India, have been traditionally very important markets for gold products. I think culture also plays a part in it. What's your perspective on the potential for growth in gold demand in China and India, and how might policy and economic factors influence gold prices in these two places?
Well, you're quite correct. Chinese and Indian gold demand is globally significant. Those two countries make up more than 50% of consumer demand. I'd expect to see demand increasing in both of those countries over time as both China and India become richer. But there's more to it than that. I think that we're starting to see now the purchasing and investment and trading taking place in emerging markets really dominate price formation in gold. Emerging markets have represented a majority of gold demand now for decades. But it's only over the last year or two that the trading volumes that we've seen in China and elsewhere have started to determine the global gold price much more.
Very interesting. So, as you just mentioned, these two emerging markets are paying more attention to gold ETFs, exchange traded funds. Tell us, how do financial instruments like gold ETFs impact long-term stability of the gold markets compared to traditional gold, as you just mentioned, maybe some gold bullions, gold coins, and gold jewelry?
Look, I think the best stability for the gold market comes from increasing the diversity of abilities to buy and sell gold. If gold demand is dominated by one category, such as jewelry, then it's very vulnerable to trends and fashion. But when you have a balance between investment in physical products, investment in financial products, obviously jewelry demand, central bank activity, tech demand, I think that leads to a really healthy and much more stable market.